Welcome. This is the Day Trading Visual Basics website, and it's DTVB for short. We use that acronym a lot. And we show people how to trade stocks. But much more important than that, we show people how to preserve their principal, because that's the number one priority in any type of investment you might get yourself involved in. Personally, I was a real estate broker for 30 some years and developed real estate in the Minneapolis market for a couple of decades. And the majority of my investment activity during that time was in owning real estate, obviously, as a developer. The type of investing that you do has to have that critical component first and foremost in your mind when you're dealing with investments. And this system is distinctly different than any other system I've seen before. It started personally, well, first of all, we can find gaps. When a stock gaps $3 or $5 the next day, or even $7 to $9, we can show you the indicator setups that or arrangements that will identify that stock will be a gap up or gap down. And it's exciting. And some may not believe it, but it is absolutely amazing. And it started in 2007 when the banks in the state of Minnesota stopped lending money to small developers like myself. I just was looking for something else to do, and I started messing around in the stock market, and I really and not paying attention too much because I had plenty other activity in my real estate ownership at that point in time. And so I didn't really grasp or like what I was doing in the way of trading stocks because my hands were full elsewhere. I made my first trade in 2007. My first. And when I did that, I was using the system that I had in place to identify what I suspected or anticipated that stock would, the price would move in a particular direction. In this case, it was going to go up, supposedly. Unfortunately, I did not even have a system. I did not have any methods. I wasn't using any technical analysis. I was blind. But I thought I was okay because I had the belief that stock was going to go up. Now, that's the only system that I had. And we, I guess I should say I developed or started developing a system for myself because I was my trading activities were very inconsistent. I would make profit on one day and lose the next, and do it time and time again, week after week and month after month. Several weeks after I got started, I decided to track what I had done, and did not realize the importance of trade logs at that point. all I did was mark down the profit or the loss that I made on each transaction. And that's very simple, very crude, but it was a real eye-opener for me, because I really then saw the inconsistency that I was involved in, or the trap that I was involved in. I thought I was doing okay, but the record showed that was not the case. And so I began my first premise in trying to develop a system that I could personally use. We had no desire, or I had no desire in selling this system. I just wanted to create something that would solve my inconsistency problems, because if I was going to trade stocks in my retirement, I needed to have a method or a system that worked the vast majority of time. Stockbrokers will tell you, or people, floor traders, whoever, will tell you, well, don't try to pick the bottoms or the tops because you can't do it. And that's not true, because we have a system. I say we, but it's most of it is I built. I'm guessing somewhere between 12 to 1400 indicators, well over 1,000. I kept only 22 market force recognition indicators. Totally in the system there are 40 indicators. 9 of them, there's 4 band charts, so there's an upper and a lower band. So there's on each band on the candle chart, plus the master long-term trend line. So that's an upper and a lower times 4. So you got 8, and 1 is 9. There's 31 indicators left, and 22 of those are market force recognition indicators. What I really mean there is they're very fast. Several of them are leading indicators as well, if you understand that concept. But those sensitive indicators took a long time to build, and it's difficult for a person that's 19 years old and looking to make money trading stocks and seeing the potential of knowing when a stock is going to gap, and they think it's there's fast money. But when you get to be my age, you understand the importance of the preservation of your principal. And so a younger person might not see that, but it is very important. And the sensitive indicators they're basically the heart of the entire system. If we didn't have the sensitive indicators, the rest of the system would be worthless, because you can take poor indicators and put them into the exact same format and operational criteria that is used in the DTVB system, and you're not going to get the results that you would get with the sensitive indicators. The indicators, as we were studying them and analyzing and examining them and testing and verifying, led us to what we call patterns. They're basically indicator arrangements in which the arrangement will move a price in a particular direction a high probability of times, like, maybe 6 out of 10 times or something like that. And so we began tracking these patterns, and the 3-step formula is a system of patterns, conditions, and signals. The patterns identify the high probability trade, and the conditions And a pattern with good conditions, excuse me, will lead to a high probability of 90 or 95%, even higher, that that pattern will move in the direction anticipated. Or I should say that price will move in the direction anticipated when you have good conditions. And then the signal is the point in time when you enter or exit that trade. And this system is, I mean, we've all went through the recession that, at least for us in Minnesota, it was late 2006 when it started. And I talked to some people and it didn't hit their industry till 2008. But we definitely felt it in late 2006. And hence that's why I started my stock trading activities in 2007. But the point I'm trying to make is that as we used these indicators and discovered these patterns and determined that with these conditions we could then have a stock that on that particular day was going to move in a specific price direction with a real high probability occurrence ratio. And so today we trade only high probability transactions. Most traders don't even understand that concept. They just find something that they think looks good and they have a system, they call it a system. It's probably a method or it's a technique and it might work for them, but they don't bother looking at something else. And when I made the decision that this would be a good opportunity for beginners, I didn't realize the importance that it meant for others that were 2 years trading stocks or 5 years or even 10 years trading stocks, because we all fall into traps, and I just call them I'm okay traps, or you can give them whatever name you want. But these traps that we fall into, we got a system, we use the system, we think it's okay, and we don't bother looking at something else. But yet, it's just like me. I I knew that as after I had discovered, I just did that one little analysis of profit and loss on each transaction. In the weeks and months that followed after that point in time, I knew that I didn't have a system. But my goal was to trade stocks and figure out, I'll find some method, I'll find a better technique, I'll find a system to use. And all the time I was doing this, I would discover a new item or a new thing that I thought, oh, this is a better way of doing it. And it was many months before I realized that I was not doing the 2 steps required in what my plan was. I was trading. My other part of my plan was that I'm going to develop a system. Well, I was looking for a system. I was looking for a method. I was looking for a technique. I wasn't doing the activity that a developer does in finding how I can build a system. Example, as a real estate developer, if I bought a piece of land that I could put 50 or 100 homes on, I checked out the market. I analyzed what lots were selling for in that area, what homes were going for in that area, who was selling those homes, at what rates they were going at. And there's 100 questions you get answered to determine your market scenario or situation that you're going to jump into, because it's a long-term venture. You're going to be a year or 2 before you start selling lots after you sign a contract to buy the land. So The same the same is true with creating a system. In this case, for my own personal use, at least initially, uh, I wasn't doing the work of developing, of figuring out what was working, what was not working. Uh, the most important question: what is missing? You can be a real estate developer, or you can be a person that develops a piece of software, or anything else that you develop. The key thing is to determine what is missing from your product. Because if you can incorporate what's missing, you've got a better product to sell. So that is the most important aspect of developing something that you want to market. Now, forgive me for that rabbit trail, but I needed to convey that information to you to show you that we have a three-step formula of patterns, and we identify good conditions or poor conditions, and then we also have signals. They have a lot of different names. You can go to the pattern types on the website. I would encourage you to listen to the first 10 videos to watch, because that'll give you a summation of a real good summation of you'll pick up a lot of information by looking at those 10 videos. There are a lot of videos on this website, and you can pick your areas. Those that are gap hunters are going to be interested in the one pattern and two pattern gaps. Recognize that no matter what type of pattern that you have, there are conditions to them that make them highly probable. The patterns that we have are, or let me back up. The system that we have is primarily a reversal system. When the cycles change, when the trend cycle reaches the top and starts going down, that's the start of a downtrend. And our system is geared to finding those cycle changes, or finding those start of uptrends. Because let's face it, if you can be one of the first ones into the market, as people are buying, for example, if you buy something at the bottom of the cycle, people are buying that stock. As when they're buying it, it's going up. And so you can just go along for the ride. So being one of the first ones in is very important. When you have sensitive indicators that pick up tiny market force movements before the big movements take place, there's a power there that is oftentimes overlooked by many. But the system has three powers that are really commanding powers as well, that I'd like to mention. You've got the indicator power, you've got the formula power, and you've got the procedures power. And the procedures power is basically, we've created a system in which you make judgment decisions on which indicators are moving where and why in relation to price movements. And the length of the line of an indicator can tell you what's happening or going to happen, and we call them leading indicators. Just like momentum can be a leading indicator. But the premise behind what I am trying to share with you, it's just look at the preservation of your principle. If you recognized in this, we just went through a pretty significant recession here in the United States, and as a result of that, I mean, it's lasted many years. And as a result of that, if you understood what the stock floor traders understand, or even stock brokers, you could have got out of the market when everything went south. and then bought back in at the bottom. And because that's what they did. And hundreds and thousands and millions of people were stuck in all kinds of investment instruments in which they just had to go down with the price. But they could have got out. Very simple ways to get out. Doesn't make any difference what kind of instrument you were in. They could have got out and bought back in at the bottom. And that's when we talk about the preservation of the principal, that was one of the key things we were after, because we were concerned, at least in the beginning, more so about determining and finding signals that were best for exits. I mean, when do you exit a trade? So lots of different issues inside of this. There are the entire system is built on patterns, conditions, and signals. And whether you're a gap hunter that wants to deal with one patterns or two patterns, a one pattern, for example, has out of those 22 indicators, it might have 12 or 14 or 17 of those indicators in a bottom of cycle pattern, in a bottom of cycle movement. In other words, it went down and then it went up. It's in a basic V, and it hit the bottom and now it's going up. And there are many different patterns that we identify and show you in the system in which they identify and signal the bottoms and the tops of trend cycles, because this is what it's all about. And in so doing, they obviously pick up stocks that are going to gap up or gap down. And the beautiful thing about this is the accuracy with which the signals tell us the movements, because the sensitive indicators will all point in one particular direction, like they'll all point up or they'll all be down. And so the price direction is not an issue, but if you're in the beginning, you may not know the system as well as you will after you use it for a while. And the one pattern can go up next day $5, or it can go up next 3 days $5, or maybe the next 7 to 9 days $5. It'll go up. Each day you need to reanalyze it and determine what the indicators are telling you. But I say that because gap hunters like to deal in one-day activities rather than buy into a trend like swing traders. But the key thing is that these indicators will tell you that the stock price is going up. You just need to identify the good conditions that will increase the probability that it'll go up real fast versus slow over a 5 or 7 day trend. So the system is amazing. I really encourage you to spend some time. The one last thing I'll comment on is the system is built in the TradeStation platform. So it's at tradestation.com, and you can go into the App Store there and type in DTVB, and it'll take you to the app, and you can use the free trial. And with the free trial, TradeStation lets the simulator be used. There's no money to deposit. There's nothing that you have to do. The The beautiful thing about this is before you start the trial, spend some time on the website and learn about what's happening here. And look at the videos, because the videos will show the movement on the charts as I discuss why and what went up. And so you can always come back to the videos, look at them anytime, but do that before you get started with the trial, so that you have some added benefit to understanding the trial, because it's a couple weeks long, and that's more than enough time to determine if you like the system or not. But you can get a jump on it by just spending a week or so looking at videos before you start the trial. So whatever you do, whatever type of investing you're involved in, have fun.